Tonight's topic is Master the Art of Trading Naked. Okay, just a word of disclaimer. This webinar is purely for educational purpose. It is not meant for me to provide any investment advice. Should you wish to seek any investment advice, the appropriate person will be your broker or your licensed investment advisor. So if you are trading or investing, the risk of loss can be substantial. So therefore, you need to pay particular attention in risk management. So with that disclaimer, let me start the webinar proper. So let me just introduce myself. Right, I'm Dr. Fu. I'm the private trader. The definition of private trader is one who trades with his own money, as opposed to institutional traders or hedge fund traders who trades with other people's money. I'm also the author and coach. I spent almost like 25 years in the banking industry, spent almost like 2 decades in trading, mainly in stocks, futures, commodities, and currencies. At the same time, I'm also the author of several leading books, including Trading Naked, which is the subject of tonight's webinar, Price-Driven Trading, 8 Candlesticks Patterns, and my latest book is Becoming a Consistent, Profitable Trader. So I'm also a developer of Trading Naked methodology, which I'm going to spend a bit of time talking about this tonight. So the objective of tonight's webinar will be, one, to explain what is Trading Naked, which I think is very important that all of you understand what Trading Naked is all about. And then I will go on to argue a case that all traders, investors, should consider using Trading Naked methodology in their plans. And finally, I'm going to explain how you can apply this Trading Naked methodology successfully. So let me start off by asking this question: what is Trading Naked? It is actually based on my book, Trading Naked, Make Money Trading Price Patterns. The definition of Trading Naked is very, very simple. Trading Naked actually means trading without technical indicators or oscillators. So for some of you who are not familiar with oscillators, let me define oscillators for you. Oscillators basically are mathematical formulas that use historical data such as price, volume, or time, so that you can generate signal or value. So the key word to understand about oscillator is it is based on some formula, and that formula generates signal or what we call trading advice. Trading Naked methodology only use price and patterns. So the key word is price and pattern. There's no mathematical formulas in Trading Naked. And the whole idea of using Trading Naked based on price and pattern is really to help traders to read the minds of the market. At the same time, you can use price-driven strategy to profit from trading the market. So let me just show you about a naked chart. Now here is an example of a naked chart. As you can see from this chart, It's a very, very simple chart. Okay, with candlestick patterns. So all these are candlestick patterns. The red denotes the bearish candle. The green denotes the bullish candles. So by looking at the charts, you can actually read what the market is telling you. So as you can see, there is no disruption. This is a very clean chart, and that's why it's called a naked chart, because there's no any other indicators or oscillators on the chart. So it's a very clean chart. So the whole idea of using a naked chart is it is based on price and space. So by looking at the time and the space, and looking at what the candlesticks are showing, you can really read the mind of the market. So as you can see, it is a very simplified way of reading the market, meaning you don't need any other tools to help you. On the other hand, if you look at a non-naked chart, now this is a typical example of a non-naked chart with Bollinger Bands, and you got the MACD here and the stochastic. So the MACD and the stochastic and Bollinger Bands is what we call indicators or oscillators. So as you can see, by using a non-naked chart, number one, there's a lot of information in this chart. Secondly, when you use a non-naked chart, you are actually using stochastic and MACD to help you to figure out the trading signal of the market. So that is a major feature of using a non-naked chart. And this is a very typical example of charts that are used by many traders. So what are the differences between what I show a naked chart? So this is a naked chart, and I'm also putting besides the non-naked chart, the one that I showed just now, okay, with Bollinger Bands, with MACD and stochastic. So as you can see, there's a world of difference between a naked chart and a non-naked chart. So the way to trade a naked chart is you got to figure out, okay, so there is a signal. And for the non-naked chart, you have to look at the oscillators, the MACD, and the stochastic. Okay, as you can see, this is a downtrend, very bearish. So over here, it is still showing a bullish. It's still showing a bullish candle. Okay, although the naked chart shows it is a bearish candle. So there's a world of so this signal is pretty late in the game, right? So you should be selling here. Here, there's no signal to sell. So that's a major difference. So when the market turns, okay, as you can see, there's a lag here. There's a lag in MACD and stochastic. Although the candlestick is showing a turning point, MACD takes a while to give you the signal to buy. So that's There's something we call it a legger. So to summarize, that is a major difference between using a naked chart and a non-naked chart. You got what we call the delay factor in using the indicators and oscillators. And in the world of trading, timing is so important. So naked charts or trading naked is based on this thing called price action. The definition of price action is pretty straightforward. It's actually price behavior plus candlestick patterns. Price behavior and candlestick pattern will give you price patterns. So as you can see, trading naked only make use of price and patterns. So in my book on page 6, I define trading naked as trading without using any technical indicators or oscillators, but strictly using price action. And trading naked strategies in my book are among the most successful strategies of professional traders. So the approach in trading naked is really to use what I call price action that is based on very specific setup. And the setup I call sets, stop, entry, and target. At the same time, I'm also using price pattern. Trading naked methodology is actually based on 5 elements. The first element is called price action. Second element is market structure. Third element is trends. Fourth element is setup. Fifth element is trading opportunity. And sixth element, by the way, there's a typo error. Sixth element is high probability strategies. So with that definition of trading naked, let me turn to some of the major challenges of traders. The first major challenge is, of course, financial markets are highly volatile and unpredictable. That being a case, if you're trying to forecast or predict what the next candle will be or what the trend of the market will be highly unprofitable, because forecasting and predicting doesn't always accurate. And the fact that financial markets are driven by fundamentals. Fundamentals are defined as economic factors, political factors, social factors, regulatory factors that affect the market. So fundamentals are extremely important because that drive what I call the supply and demand factors. And that give us the prices. The third major challenge is, of course, markets and price movement are highly unpredictable. So as I said, trying to predict a market is like trying to predict the weather. Whether it's going to be rain, it's going to be sunshine. And weather, as you know, is fairly unpredictable. And during active hours, there's a lot of volatility. And trying to predict price movement can be also very challenging. And finally, as I mentioned just now, using technical indicators or oscillators may not help you in trading. So let me turn to discuss about some of the common mistakes of traders. The first common mistake of course, what I call unrealistic expectation. Now, this is a major problem of new traders going to the market that has unrealistic expectation, meaning they expect to make a lot of money in a very short time, or they are not able to fund their trading account to a level of their expectation in terms of profits. The second mistake is, of course, trading without a trading plan. And this is, of course, a major problem with many traders who trade without a trading plan, because trading without a trading plan is like, trying to navigate traffic without knowing the situation. Third, very famous mistake, fear of missing out, or FOMO. And fear, of course, is one of the big psychological factors affecting many traders. Fourth, risking more than you can afford. And that's, again, is a major mistake of most people when they do not consider risk control or risk factor in trading. Fifth, not cutting losses fast when they are wrong. Why? Because when they are wrong, they are hoping that the market will turn into their favor, which normally will not happen. Six, leveraging too much. While leveraging is a double-edged sword, if you are wrong, you compound your losses. Yeah. Next is trying to anticipate news, events, or market direction. This is a common mistake of most traders who are trying to anticipate news events. Because when news come out, it can really affect the market, and you're trying to anticipate good news, it could turn out to be bad news. Or it could be good news, but it's interpreted as bad news. Next is following tips blindly. And that's a common mistake of most people. Some even subscribe to signal service. Some get advice from what I call market gurus, or some listen to gurus from other trading systems. And finally, you have this problem of overtrading. And this is one of the major mistakes of most experienced traders. So the message is really, you lose the war before it gets started. And if you do not correct this mistake, you will always suffer losses. And statistics have shown that only 5 to 10 people are profitable. Okay, now that I've defined what is trading naked, let's move on to ask the next question. Why trading naked? The main reason of using trading naked is really to achieve what I consider to be the most important in trading: consistency and profitability. People can be profitable, but they are not consistent. So the whole idea is, you're going to learn something that you can achieve consistently and profitable. By using trading naked, you're actually learning price action, and price is really the footprint of money. So you do not really need indicators to tell you whether to enter a buy trade or sell trade. if the big boys are buying, well, it will show up on the chart. So you really do not need indicators and oscillator to tell you that the big boys are buying or selling. Third, trading naked is simple to apply in any time frame, in any style of trading, and of course in any financial market. So it is a very flexible way to trade the market, irrespective of your style of trading or time frame. And last but not least, is widely used by most professional traders. So there you are. You have a justification to use trading naked. In my book on trading naked, I discuss about the models of successful trading. And I pay particular attention to this thing called foundation. Now, foundation is extremely important in trading. If you do not have a foundation, you really do not know how to trade. So once you have built the foundation, then you understand the fundamentals of trading, fundamentals of the market, applying money and risk management rules, learning a methodology, and last but not least, paying particular attention to psychology of winning. And in any trading, you always have to remember that you got to treat trading as a serious business or as a important occupation. And the first step must be you got to write a comprehensive trading plan. So without a comprehensive trading plan, as I mentioned, you're just trading blindly. You are trading emotionally. You've been trading without some plans or ideas of the market. So let me share with you a comprehensive trading plan. The first item is, of course, you got to know yourself, what sort of trader you are, what sort of personality you have, and what's the purpose of the trading, and what are your trading goals. So extremely important. Second, you must define the markets that you want to trade, the instruments you want to trade, the time frame you want to trade. You got to define the tools of the trade. What sort of technical tools that you want to analyze the market. Then, before the market open, what must you do? You cannot wait for the market to open and do not know how to trade. So before the market open, you got to have a plan to attack the market. And what are your risk and money management rules? How much money are you willing to lose? What are your money management criteria? And you need to define in your trading plan. And most important, how are you going to close your trade? What's your exit strategy? And you got to define your trade opportunities, the strategies you're going to trade, the setup, and the entry criteria. And after, when the market closes, what must you do? So a comprehensive trading plan must have the 8 items I mentioned here. In addition to your trading plan, you got to have what I call a game plan. And my definition of a game plan includes the following items. One, you got to be able to identify the trade opportunity. You got to be able to locate the trade after you have defined the opportunity. What is the state of the market that you are trading? What is your entry method that you want to enter the trade? Where are you going to place your stop loss? How much you expect to make from the trade? What's your profit target? If you are trading correctly, you might want to scale in your trade. And finally, you got to consider where you need to adjust your take profits or your stop loss. So there you are, the 8th item of your game plan. So let me recap what I talk about here. To succeed in trading, and I stress many times, you got to understand yourself. What type of trader you are. At the same time, you need to conquer your inner game in trading, what I call winning psychology. You got to be able to master your risk management. At the same time, you have to follow some methodology in trading, which in this case is trading naked. So let me just share with you the Chinese wisdom in strategy. That's called the Sun Tzu Bin Fa, the art of war. The art of war says you don't know thyself, know thy enemy, 1,000 battle, 1,000 victory. And what has the art of war got to do with trading? So let me share the commonalities. Number one, know thyself. In trading, it means your trading personality and your style of trading. Know the enemy means you got to know the market that you're trading. So selection of the market to trade, why you can trade the market well is important. 1,000 barrel means you got to plan the trade and trade to win. And victory will only come when you know your trading edge and profits. So unless you know your trading edge, there's no way you can gain or profit from the market. So there you are, the Chinese art of war related to trading. So let me just talk about some important points in trading. Number one, trading is about probabilities and not certainties. And that's very important because many people forget that trading is about probability. There's no holy grail. There's no guarantee that you'll make money. As I said, there's no holy grail. And making losses are for sure. In trading, you cannot run away from making losses. And that's something that many people forget. They always think that when they start trading, they expect to make money. That's not correct. When you start to trade, you must always think of how much you're prepared to lose. That's for sure. And you will always have losses. So when people tell me they got no losses, I for sure cannot believe it, because making losses is part and parcel of trading. It requires hard work and continuous learning and improvement. Japanese call Kaizen, mean you cannot rest your laurels, you cannot stop learning because the market keeps on changing. It is definitely not a get-rich scheme. And many people forget that trading is about a marathon race, not a sprint race. And it is a zero-sum game where only 5 to 10% of traders make consistent profits. In short, trading is about achieving a positive expectancy in the long run. So let me quickly define what is expectancy, because that is the most important measurement in trading. Expectancy really refers to what you can expect to earn on average for every dollar you risk in trading. It's a very simple concept, but unfortunately, many people do not understand. In simple language, it means if you're going to risk $1 in the market, how much return can you get from that $1? It's as simple as that. And that is what we call expectancy. So to calculate expectancy, you need to use the expectancy formula, which is this. Your ER equals to PW times AW minus PL multiplied by your AL, where your expectancy is defined as the probability of winning multiplied by your average win minus your probability of losing times your average loss. At the end of the day, if you do not have a positive result, then you are not making money from the market. As simple as that. So every dollar you put in, you lose more than $1, which is negative expectancy. So the whole idea of trading, you need to have a positive expectancy. Now here's a very good example of expectancy. You have 300 trades, your win rate is 50%, your loss rate is of course 50%, average dollar win $10, average winning dollar is 15%, average loss is $10. So you have, using the formula, you get a 25% expectancy, which is good because it's positive. Your probability of winning is defined as number of your winning trade over your total number of trades. And your probability of winning is influenced by the nature of the market, type of trading strategy, your position size, and your trading style. Another example, your average dollar win is defined as the total number of dollar win over the total number of winning trades. Your average dollar loss is the total number of dollar loss over your total number of losing trades. Your win rate, total number of winning trades over your total number of trades. Your loss rate, total number of losing trades over total number of trades. And here's a work example. My win rate 55%, loss rate 45%, average dollar win 15, average dollar loss 10, positive expectancy 37.5%, which is excellent. Huh? Okay, here's another example. So the important thing about expectancy is when you are trading, your ultimate objective is to achieve a positive expectancy. Okay, let me turn to the three components of trading, which are psychology, money management, and trading methodology. So in this webinar, I'm going to focus on trading methodology, which in this case, I'm talking about trading naked methodology. Like any trading methodology, the expectancy is to achieve a positive expectancy. In other words, the trading methodology should be able to give you a positive return. For every dollar that you raise, you expect a positive return on that dollar. So the aim of trading naked methodology, like any good methodology, is to achieve a positive expectancy return in your trading. That is the main objective of this methodology. So the key question, of course, is how to apply trading naked methodology. Now, obviously, this methodology is developed by myself, and I published this book, Trading Naked, that contains the methodology. So let me just spend a couple of minutes talking about trading naked methodology. The basic premises of trading naked methodology is that trading is a business. Or you might want to define, for some people, trading is a serious business. Like any business, at the end of the day, if you really cannot make money, then it's not viable as a business. At the end of the day, if the business is not making money, then you have to close the business. Huh? So trading is the same. You have to have a mindset that at the end of the day, you're going to run trading as a business. And to run trading as a business, you've got to have a plan to make sure that at the end of the day, trading is profitable. Or in this case, trading is able to give you positive expectancy. So therefore, you need to develop a comprehensive trading plan, that you need to follow the trading plan, because the trading plan is going to guide you to run trading as a business. So that are the two major assumptions of trading naked methodology. One, you've got to take trading as a very serious business. And second, you've got to have a comprehensive trading plan to make sure that you are running trading as a serious business. Then we talk about price action trading. In price action trading, as I mentioned just now, price is a footprint of money. In price action trading, we focus on this thing called price, nothing else. So price is the most important element in the market. So when price goes up, we buy. When price goes down, we sell. It's as simple as that. Huh? So when the big boys are buying, you can see that there's a footprint of money that's displayed in a form of a bullish candlestick patterns. And when the big boys are selling, your chart will be able to show you a big bearish candle. Next, we use some form of analysis. And in my case, we use candlestick analysis. And by learning candlestick analysis, we understand, number one, what the market is telling us in terms of the trend of the market, what sort of state of the market are we trading. And the most important thing about candlestick, it gives you candlestick patterns that really helps us to define the strategy you're trading. So in trading naked methodology, I have what I call the 3 P's. The first piece is the principle. The principle of trading naked is based on this thing called KISS. Keep it simple, Simon. Meaning, the methodology is simple to learn, to apply, because there's no complication in trading naked methodology. And simplicity is the best form of trading. Next, the next P is the procedure. Trading naked has certain set of procedures, which are called sets. Your stop loss, your entry, your target. And that's the most important aspect in your procedure. Remember the 8 points in your game plan? Set is part of the important procedure in the game plan. And finally, the practice of the methodology is based on price action. Meaning, we only look at a series of price patterns, starting from the most recent price patterns to certain historical patterns. That really depends, again, on your time frame you're trading, the market you're trading, and what strategy are you adopting. So if you are a scalper, you do not need to look at historical price. You only have to look at the most recent price. So the practice will define the way that you're going to trade the market using price action trading. Let me talk about strategies. The core strategy of trading naked is based on trends. Now, obviously, when it comes to trends, it is not as simple as most people think. Trend, to some people, is not subjective. It's got to be objective. So in trading naked, we define trend in a very specific way. And you can trade non-trend as well. So most of the time, the market is non-trend. Probably about 70% of the time, the market are non-trend. So trading naked handles the 70% of the time that you are trading based on non-trend strategies. A key part of trading naked methodology is based on market structures. Now, what are market structures? Well, we look at the market structure high, the market structure low. Meaning, what are the extreme price behavior of the market. So sometimes the market has a hit very extreme level. The extreme level could be extremely low of the market or extremely high of the market. So by understanding the market structure high and low, we know the way that the market will behave. Next, we look at supply and demand zone. Now, they are very specific area in your market or in your charts that define where the majority of buyers, the majority of sellers. And this is what I call zones. Demand zones are where most of the buyers will occur. Supply zones are where most of the seller occurs. So by defining your supply and demand zone, you really know where to buy and where to sell. Next, we look at the peaks and the valleys. The peaks are very important because it shows the extreme price movement of the market. And we look at the valleys, we know where most of the sellers take place and where's the turning point of the market. So by understanding peaks and valleys, we're trying to figure out where are the turning points of the market. Then we need to look at key levels of the market. And the key levels of the market are what I call the psychological level. These are actually big numbers of the market. And by understanding the psychological level, we know where are the major turning points, where are the inflection points of the market. At the same time, we can use Fibonacci levels, Fibonacci retracement, Fibonacci extension to define where the key levels are in the market. At the same time, we also can use gang levels. Gang levels are extremely important. Key levels that you can use to define the support or resistance level. And Trading Naked provides trades opportunity. Trade opportunity in terms of defining your trade setup. What are the parameters that you look for to define where the trading opportunity occurs? Now here is a very brief flowchart of Trading Naked. Okay, we start off with what I call a market analysis. The market analysis is very important in trading because it defines the direction of the market. And if you do not understand the direction of the market, it's as simple as telling you that you do not know where the market is going. Next, you're going to do what I call a trend analysis. Trend analysis addresses the question when to be a buyer or seller. So you got to figure out whether the trend has started, whether the trend is continuing, or the trend has matured. So when you are trading, you want to get in the trend as early as possible, and you exit when the trend is matured. Because at the end of the maturity, the trend turns, or what we call trend reversal. So understanding trends is so important in trading that you've got to understand, as I said, where to get into the trend. So when to be a buyer or when to be a seller depends on understanding your trends. Next, market timing. Market timing is extremely important because you want to get in, okay, before most of the other players get into the market as early as possible if you can. Before the market turns, you want to get in, and when the market reverses, you want to get out. So the key question of market timing is extremely important because you want to know where to buy. As I mentioned, you buy at the demand zone and you sell at the supply zone. Now, most traders lose money is because they don't understand where's the demand zone, number one, and do not know where to buy, because most of them, they were buying at the supply zone when you should be selling. Instead, most people are buying at the supply zone when everybody is selling. Next, we turn to one of the most important factor in trading, price. So we want to analyze price. What is the price behavior? Now, analyzing a price is extremely important, as I mentioned, because you want to know how to buy, how to sell. In our case, we use naked charts to help us to analyze price. By using candlesticks, we are able to determine whether the trend is bullish or whether the trend is bearish, whether the trend in terms of price is about to reverse or continue. Once you have done that, understanding the market, understanding trend, understand market timing, and analyzing your candlestick charts, we are in the position to do the trade setup. In terms of the trade setup, we are trying to figure out, okay, where is the best place to put in our trade, put in our buy orders, sell orders, where are stop loss, where are exit point, at what point should we scale in, what point should we scale out, what point should we take our profits, what point should we exit the trade. In terms of trade management, you see, once you put in a trade, you got no control. The market takes over. So if you are wrong, you got to cut your trades as fast as possible. And if you are right, you should know when to scale in your trade and when you take your profits and close your trade. Now, after you have done your trade management, meaning you have finished trading for the day or trading for the hour, you got to have what I call the follow-up action. Now, many people forget that the follow-up action is extremely important. The main thing you need to understand about follow-up action is, do you analyze your trade? Do you know how many trades are winning, how many trades are losing? What's your winning trades in terms of average dollar? What's your losing trade in terms of dollar loss? In other words, your expectancy ratios, as I defined earlier for you. Follow-up action also means generalizing your trades, analyzing where have you gone wrong, learn from a mistake, and making sure that you understand where your mistakes are, because mistake really give you the learning or the experience that's needed in trading. So the follow-up action is extremely important because this is an area that will give you a lot of improvement. Let me just explain a bit more about market analysis. Market analysis basically means, number one, how you analyze the market. Now, there are three important components in market analysis. The traditional way is, of course, you do what you call a fundamental analysis. Fundamental analysis will give you what I call the big picture of the market, the macro picture of the market. The big picture will include understanding the drivers of the market, whether is it economic drivers, geopolitical drivers, or what we call the regulatory drivers. Fundamental analysis also means understanding the framework of the market. So for some people, they rely purely on fundamentals to give them a flavor of the market, to understand the risk factor of the market. Next, we turn on to a very important market analysis called technical analysis. While the fundamental analysis will give you the big picture of the market, it is a technical analysis that tell you at what point you get into the trade, what point you get into the market. Technical analysis basically means you are looking at historical data, you are looking at the current data, you're trying to figure out based on historical data and current data what you think the market are behaving or what do you think the market are doing. There's a lot of technical analysis that you can apply. You can use what I call price action. You can use what people call technical indicator oscillators. Then, of course, the third area is price patterns. So you got to select the tools of technical analysis that help you to analyze the market. But at the end of the day, choosing the tools, choosing the tactics of technical analysis are important because you need to supplement technical analysis with fundamental analysis so that the two are able to give you the appropriate signal to enter the market. Next, we look at the behavior analysis. Now, the behavior analysis will give you an idea of the risk of the market, and understanding the risk is extremely important because you do not want to enter the market when everybody is selling. You want to get into a market where everybody is buying, or the market has a what we call the positive flavor. And in trading naked, we rely on candlesticks and candlestick patterns. And finally, one of the most important market analysis is what I call the market 4-cycle analysis. Now, there's a lot of literature in the 4-cycle analysis. Now, they can be very complex, and depending on which market analysis cycle you are looking at, it can be very, very complicated. But the 4 cycles I'm talking about basically means that you understand whether the market is about to turn, whether there's a trend, whether the market is exhausting, or whether the market attracts more sellers and buyers, or more buyers and sellers. So this is what I call the 4-cycle analysis. The 4-cycle analysis basically means the market has 4 cycles that you can actually apply. I will not go into the technical details because it can be, as I say, very complex. But just to say that market has 4 cycles, and you could be able to know at what point each cycles state in a market. So if you combine fundamentals and technical, is what I call fusion analysis. And fusion analysis is very important in trading naked because we do not just use technical. We also complement technical with fundamentals because we want the analysis to be very thorough and robust. The traditional way is, of course, just using technical, but to be very complete, technical got to be complemented with fundamentals. And the term that we use is fusion analysis, meaning the combination of fundamental and technical to analyze the market so that it will give you that robust analysis. And with fusion analysis, we move on to talk about trends. In trends, there are many ways to analyze trends. The main trend analysis basically means you got to select some technical tools to analyze the market. Some people like to use moving averages. Some people like to use trend lines. Some people like to use channel. Some people like to use support and resistance. There's a lot of tools that you can learn and apply to analyze trends. Next, we look at multiple time frame. Now, multiple time frame are very important way to analyze trends because trends can exist in every time frame. So, for example, if you are analyzing the daily charts, daily chart will give you a trend. If you are looking at 60 minutes, 60 minutes will also give you a trend. And we are looking at 5 minutes, 5 minutes also give you a trend. So the question here is, If you're using two time frame, then it could be very conflicting. And you're using one time frame, then it's very simple. So if you are really analyzing trend, then you might want to consider multiple time frames to make sure that the time frames are aligned. They will give you a better analysis of trends as compared to just using one time frame. Then in terms of trends, you also want to look at market structure. As I mentioned, market structure can mean analyzing the extremes of markets, analyzing what I call the swings of the market in terms of the peaks and the valleys, the turning points. And in trend analysis, we focus more on, number one, whether the trend is what I call a new trend, a mature trend, or continuing trend. Next, we look at price analysis. In terms of price analysis, we look at the behavior of price movement in terms of price patterns. So by analyzing price patterns, we really know what the market is telling us. Then that will give us a very robust understanding of at what point do we get into the market, at what point do we get out of the market, in terms of the timing, whether we should get it now, a week's time, or a few days' time. For people who are using fundamental analysis, they focus on key areas like micro and economics. Microeconomics is very important. If, for example, trading in certain market like the stock markets, for the stock market, you want to analyze the fundamentals of the stocks, whether the stocks has a strong earning, historical strong performance in terms of dividends, in terms of yield. So microanalysis is important for certain asset class. Next, we're going to look at global macroeconomic factors that drive the market. Now, in today's context, global macroeconomics are so important because global macroeconomics can mean that the market can continue to perform or it can reverse as quickly as possible. In the case of a war, global economics what dictates the market behavior. So, for example, the recent war that took place 4 days ago, it affects the global market. So in today's geopolitical context, the global macroeconomic factors are extremely important in analyzing the behavior of the market. Next, we look at intermarkets. Now, intermarket basically means that one market influence the other market. For example, if you are trading currency market, as you know, currency market depend on the bond market. The bond market also influenced by other markets like commodity markets. So in today's context, markets are interrelated or interconnected. So by looking at intermarket, you really have a good sense of the flow of funds, the flow of the market behavior. Then last but not least, we talk about geopolitical factors in terms of political, economic, social, technology. So these are important drivers in fundamental analysis. When we get down into price analysis, you want to know candlesticks. The candlesticks give us an important pattern analysis. So we start off by looking at the single candles. What does a single candle tell us? Then we look at multiple candles. What does a multiple candles tell us in terms of behavior, in terms of price action? Then understanding certain candlestick patterns will give us the ability to look at price and price behavior so that we can put this as an important setup in our trades. As I mentioned, technical tools are important because technical tools are used to analyze trends. As I mentioned, there are many tools in trends. You can use trend lines, you can use channel, you can use Sigfox, just to mention a few. Then Fibonacci. You can use Fibonacci tools to analyze support and resistance, retracement, and extensions of projection. And if you are swing traders, understanding swings are important because you're trading wave. You want to get into the wave as soon as possible and you get out before the wave changes. So swing traders need to understand what I call the swing charts. The swing chart will tell you your turning points, your peaks and the valleys, okay, your market high, your market lows. Your wave will tell you what wave you are riding, whether you are riding on the motive wave or corrective wave. So for most people, they just focus on trade opportunities. But trade opportunity basically means you got to do market analysis, your trend analysis. So trade opportunity cannot be a standalone activity. And once you have done your market, your trend and price, then you are in position to understand trade opportunity. Trade opportunity basically means what is your technical setup. Technical setup means what are the parameters, okay, or variable that affects the trade. Then you look at the strategy that you want to apply after you have done your trade setup. Your strategy basically means what sort of strategy are you going to trade, whether you're going to trade with the trend, counter trend, breakouts, and things like that. In terms of strategy, of course, you got to define what are your trading rules. At what point are you going to enter your trade? Where is your stop loss level? Where is the profit level? And you are wrong, where do you cut your loss? In terms of your trade management, your money management rules is extremely important. In practical real-world trading, the key thing to note is identification of trade opportunity. You got to be able to spot your trade opportunity then you're in the position to apply your trading rules and your strategies. And when it comes to position sizing, of course, your risk capital is important. How much are you prepared to risk per trade, per day, per week, per month? And you need to apply what I call precise trade entry. Manage your trade by your stop loss, your profit target. Okay, I'm trying to put everything trading naked in one page. Huh? So in my book, which is about 300 over pages, I try to put everything in one page so that you can really understand what trading naked methodology is all about in one snapshot. Huh? Okay, as you can see, trading naked methodology has many, many components. Okay, let's start off with the most basic component, the candlestick analysis. In terms of candlestick analysis, we look at candlestick formation, try to understand single candles. Once you understand single candle, we move on to multiple candles in terms of candlestick patterns. Candlestick analysis is a foundation of trading naked. And it's so important that to really understand any methodology, trading naked in particular, you will know candlestick analysis very well. Next, we look at market structure. In terms of market structure, we're looking at, as I mentioned previously, support and resistance of what I call the supply and demand zone, your peaks and valleys. Peaks and valleys are basically what I call the turning points. Okay, from top to bottom. The psychological levels that you're trading. As you know, market behave in terms of big numbers. Where are your big numbers or your big numbers? There's an important psychological level, your Fibonacci level, your Gann level, your multiple time frames. So all these are market structure. Next, we look at future analysis, which I explained just now. Future analysis is basically the amalgamation of technical analysis, fundamental analysis, and behavioral analysis. So in trading naked, we pay particular attention to market analysis, future analysis. Next, we'll move on to identify trades opportunity. In trade opportunity, we look at market analysis, trend analysis. Then we move on to talk about trading plans. What are your tactical plans? What is a strategy that you need to look at? Here we are looking at the most important aspect in trading, a return trading plan. Your trading expectancy, your trading rules or your strategy, your setup, your trading strategy that you want to trade. Then we look at what I call trade management and money management. Very important in trading are your stop loss, your entry level, your profit target. And after you have done your trade, you need to look at your playbook. because playbook is the one that's going to improve your trading. Playbook is the one that's going to give you the experience in trading. Playbook is the only one that can bring you to a different level of trading. So to me, a playbook is extremely important as a methodology. And what a playbook basically means, you document your trades, your mistake you make, the profit you make, why are you making profits, why are you losing, your post-trades analysis, meaning in terms of your win rate, your loss rate, your every dollar win, every dollar loss. So your playbook is a very important aspect in trading naked, because that's the one that, as I mentioned, will bring you to a next level of trading, your improvement. So trading naked methodology is really a complete and comprehensive method to trade the market. At the same time, it's very simple to apply. And for most people, they can use trading naked to customize to the individual trading needs. In other words, you can use trading naked as a way to develop your own trading system. So to summarize, trading naked methodology is really a professional, robust, fully integrated, and proven trading system. As I just went through a few minutes ago, I tried to put everything in one page. As you can see, there are many components in trading naked. The most important thing is it is fully integrated. For that matter, any trading methodology must has the basic components of market analysis, trend analysis, price analysis. Now, having talked about, the methodology, let me just go in and talk about some of the live markets that you can use as part of the methodology. By the way, these are only some live markets, okay, from my trading journal. So let's look at a market called Euro USD. Now, this is one of the most common markets in currency. Now, this is, a snapshot of the live market. So let's look at how we can apply trading naked strategy called a long bar. Okay. As you can see, in this market, it exhibits a very important long bar. Okay. So as you can see, this is a bullish long bar. It stands out. Okay, for the last 5 candles. So when you spot a long bar, and you know how the long bar behave, right? Okay. There is a 70% probability that once you spot a long bar, there's 70% that the next candle is going to be a bullish bar. And true enough, next candle, okay? And the whole idea of this strategy is once you spot a long bar, you put in a long trade, put your stop loss, and you just ride. Okay? So that's a long bar strategy. Okay, next we look at another currency pair called the dollar yen, my favorite pair. Now, this is again a different market from euro. And the strategy that you can apply here is what I call a long tail strategy. Okay, here's a long tail strategy. So you got a candle here, you got a long tail. Okay. A long tail basically means a rejection. Huh? Okay, a rejection. So as a result, you find that the market move very strongly up. And once you spot a long tail, by the way, this is a bullish long tail. It can be a bearish long tail, doesn't matter. So once you see the market turns, look at that. Look at the fierce, okay, market turns to the bottom. Market crash all the way down, okay, before it hits the bottom. So that long tail is a very, very important strategy. Okay, we'll turn to stocks, Tesla stocks. Okay. In Tesla stocks, one of the most important strategy is what I call the ABC patterns. As you can see here, okay, there is a ABC strategy, okay? So basically means you got a A, you got a B, you got a C. Okay, or you can do that. Okay, the A, the B, and the C. Okay. So you can see here, there's a A, got a B, the C. You got the A. So you got the A, the B, and the C. Okay. Same as here. So you got the A, the B, and the C. Right? You got the A, the B, and the C. So the A and B, the ABs, it's a very common strategy. Okay. In this case, okay, it show up in Tesla stocks. Okay, we look at another stocks called the Apple stocks. As you know, every stock is different, huh? Right, okay. Here is what we call a gap patterns appear. Okay. A gap pattern basically means something like this. Huh? Okay, you got a gap here. Huge gap. Okay. So here you got a gap patterns, and this is how you trade the gap patterns. Okay. I mentioned gap, right? Okay, so you can see the gap down, gap down. Okay, let's turn to another market called the gold markets. Okay, gold, as you know, is a very volatile, extremely fast and furious market. So in this market, we are looking for what I call turning points, turning point. Market goes up, market goes down. So here's a turning point, okay? So you can see the market goes very strong, okay, on the way up, and it crashes very fast, okay? So some people like to call this what called the inverter B, you know. Okay, let's move on to the S&P 500 and other markets, okay? And that's really one of the most common and most profitable patterns called the three white soldiers and the three black crows. Okay. Now this is a three white soldier, and this is a three black crows. Okay. So you can call this three black crows as well. Okay. Okay, yes, you can see trading naked can be applied in any market, any time frame, any style of trading. Okay, it's so flexible that you can apply this methodology successful. Then obviously the question here is how can you apply this methodology successfully? Here we're talking about the options. The option one is, of course, that's what most people do. They listen to YouTube videos. They buy books from Kinokuniya. They use chat rooms and, to understand about how to use a methodology. Of course, you can attend pre-webinars, seminars, and workshops. You can open a demo account and trade on some of the strategy. Or you can attend a paid in-person course. You got many choices, many options. The question here is, looking at how traders learn, most people, when they start off, they are considered novice. Yeah? They're what I call the unconscious incompetent. Then they migrate to conscious incompetence. This is what I call the intermediate trader. And once they've gone through intermediate trading, they become conscious competent, meaning they can trade well in the market. And finally, to achieve the ultimate mastery, you got to conquer this unconscious competent level, which is the level that most of you should aspire. So I wrote different books for different level of traders. For novice, it's 8 candlestick. For intermediate traders, it's trading naked. Because that is a level that most people should be able to build the system and trade to the system that they built. And finally, if you want to migrate, then the high probability price-driven trading would be the one. And finally, to put everything together to achieve consistent, profitable trading. In the past, I always conduct a trading naked workshop. I've not done it for many years. Okay, I intend to do one if there's a demand. Huh? The key benefit is, of course, you acquire and you learn the methodology. You learn the strategy, as I mentioned. Okay, the thing is, it built on to your existing knowledge and expertise. Huh? So as I mentioned, trading naked is a very simple yet flexible methodology that you can learn and apply. So in my previous workshop, I actually go into the 8 strategy in trading naked in terms of the candlesticks strategy, the long bar, the long tail, oracle, the advanced oracle, traders, belt hold, narrow range, inside bar, and the pivots patterns. For those of you who are interested, of course, I can run the trading naked workshop again if there's demand. It's a 1 full day on Saturday. In the past, trading naked only has 3 live markets, but this time I intend to have it for 5 live markets, and it is straight to apply strategies. Huh? And as an optional request, I can review your trading plan. At the same time, as I mentioned, I developed the bar-by-bar analysis technique, which is really the foundation of trading naked. So you really want to know more about it, please contact TLT Academy at this information here.
Okay.
So let me wrap up the key points of tonight's webinar, right? I talked about the challenges of traders, investors. Markets are always volatile. Okay. I talk about what is trading naked, why trading naked, how we can apply the methodology, showing you the framework, the flow charts, okay, and the top line diagram of trading naked. And the next step, of course, is the action you need to take. So that's wrap up tonight's webinar. I got time for question and answer.
Anybody, any questions for Dr. Fu? Anybody? Okay, this couple of things first. Dr. Fu, for the rest of 2023, will be doing 2 classes, as I've said. Train naked if there is enough demand. When I say enough demand, I'm not talking about 20, 30 people for Dr. Fu. Dr. Fu is so generally open to the idea of doing a 4-person class. Okay, so we got 4 person. Do join in. Okay, and those people who are train naked old students, you can retake the class back in entirety for 25% for 25% admin fee. Okay, anybody got any questions for Dr. Fu? I suggest you drop you all my contact details. Drop me a WhatsApp. We discuss the details later. Anybody any questions for Dr. Fu? You can tap up, or you want to ask. If you want, I can unmute you. Mr. Lee, veteran trader, SK Wu, Yong, Kaki Lang, Pat, own student, Irene, not a problem. Irene, if you are bored, okay, don't mind, Irene, don't mind. Irene financially unlimited today. Christina. Anybody, any questions? Anybody? By the way, tomorrow night I'm having a meet Thomas Saw session where I was showing how to do 10%. I will show you how to do a 400% return trade. Okay, if you want to. Anybody questions? No, nobody any questions? Let's wait for a few minutes. Sheng Lam, Mr. Lam, any questions? Mr. Wu? I think Serena is a new person. Michelin is not a problem. I met him twice already. And what else? David Bay is Kaki Lang. Michael's okay. Any nobody questions? That is bad. Okay, if not, gentlemen, let's end tonight's session. Let's thank Dr. Fu, okay, for his time and
No
effort.
question.
Yeah, so weird. Someone left early from 17 now left from 14. I can only SKU or all you very shy. Okay, do me a favor, gentlemen, send me a message or you want to talk to Dr. Fu, whoever it is, drop me a message, okay, please. Tomorrow night I got trade long sessions for US market. Join me if you're keen. Mr. Lim, Ming Nam, any questions?
Huh?
Got one. Have questions,
I
but
have
thinking of.
question, but thinking about context or what,
Actually, I think you're
what
not
does
wrong.
that mean? I don't understand.
TG Shim Lam is my student, is it? Or not my student? Dr. Fu got 2 level class. Okay, 1 level class is the enhanced dynamic traders. Okay, 5 days, 4 different trainers. Very cheap, $388, $500, a 500 discount to $388. If you Lao Jiao, like Mr. Michelin here, then I suggest you go directly to Trade Naked. Okay, Michelin, you're free. Come in, join me tomorrow night for the US live market session. Okay, these two I met him before. This guy, Mr. Xing Lam, is a veteran trader. Okay, don't waste time. Now it's already 9:30 already. Some of you want to trade the US market opening bell. So I don't know how to disturb you everything. If not, I see you if you are keen on US market. Come in tomorrow night, 7 p.m. Okay? Or you want a private session me also can. Okay, gentlemen, let's end it tonight. Okay, no questions, Dr. Fu. Singaporeans very shy one. Okay? Dr. Fu, I see you tomorrow around 11 plus at the MBS. Okay? Let's end it. Michael can close down for a night.
Okay. Okay, if there are no more questions, we'll end this webinar. And I want to thank each and every one of you for your patience, for your time. I hope that you all have benefited from this webinar. Thank you again. Good night.
Good night, everybody. Let me see. Leave.